In this week's episode, we're going to be discussing Costco stock and where it is headed in 2025. Over the last 6 months, Costco has seen a negative 0.87% decrease. Year to date, it has seen somewhat okay performance with a 8.05% increase. The reason for their negative performance over the past 6 months is due to slower sales growth, reporting their Q1 2025 earnings slightly below expectations, as well as valuation concerns relative to its peers. Fundamentally, Costco is very healthy and it does not struggle there. We can see revenue has positively increased year after year. Right now, it has a trailing 12 months total revenue of $268 million. Costco's revenue is primarily broken up into 98% sales of goods and 2% for membership fees. With the increase in total revenue comes an increase in cost of revenue and expenses, and Costco has seen just that. Their gross profit has also increased significantly from 2021 to 2024. They're currently sitting at a trailing 12 months gross profit of around $34 million. Their net income is very healthy, and they have seen a good increase in that from 2021 to 2024, and their trailing 12 months net income is sitting at just around $8 million. Taking a look over at the balance sheet, we can see their total assets have increased positively year after year from 2021 to 2024, sitting at $69 million for 2024. The liabilities also do tend to increase too. From 2021 to 2024, it has increased positively, sitting at $46 million for 2024. The next important element of the balance sheet is total debt, and really Costco doesn't have that much total debt. They've worked pretty hard at decreasing it. It was sitting at $10 million in 2021, and now it's sitting at $8 million in 2024, which is a very healthy sign fundamentally for the company. The last financial statement is their cash flow. Their operating cash flow has increased positively year after year, and it's sitting at a trailing 12 months total operating cash flow of $12 million. Their investing cash flow has been negative as they've been investing money into the company to try to expand it and increase their total revenue, as well as their financing cash flow. The most important element of the cash flow statement is their free cash flow, which has grown positively. It has been a little spotty. We can see in 2021 to 2022, it went down around $2 million, but now it's sitting at a healthy level of around $7 million for their trailing 12 months free cash flow. On the technical side of things, we can see that it was creating this strong bearish uptrend, and now it's starting to go bullish, breaking the 50-day moving average, the 100-day moving average, and just now the 200-day moving average. The level that I pointed out on the graph is the next level to focus on. It could react at this level. It has previously, as shown on the graph. I think it'll react at levels even higher than this, although the stock is going to be very bearish in the foreseeable future due to the high valuation that it currently holds. Although this level is very important to look at as it's going to have a reaction as it has previously. In terms of valuation, like I've said, the stock is very overvalued. If we look at the discounted cash flow statement, its fair price is $1,099.62. Currently, the stock price is $984.36. So for the discounted cash flow statement, this stock is very overvalued. The current price to earnings ratio for Costco right now is sitting at 55.84. If we compare that to its peers, Walmart, Target, Dollar General, and Dollar Tree, it is very, very, very overvalued compared to its peers and sitting at a lot higher price to earnings ratio compared to Walmart, Target, Dollar General, and Dollar Tree, making the stock very overvalued looking at the profit earnings ratio as well as the discounted cash flow statement. As a value investor, you certainly would not buy this stock, but for a growth investor, you actually may consider buying Costco. Although the stock price is pretty high, Costco pays out a pretty good dividend. Right now, the dividend amount is sitting at $4.36 per share. The dividend yield is going to increase too as the stock continues to go bearish. From 2018 to 2024, they've been able to increase their dividend by around $2. Their year-over-year revenue growth is 5.94%, and the sector median is 1.72%. The difference to sector is 246%, which is huge, and Costco's 5-year average for year-over-year revenue growth is 11%. Their forward revenue growth is sitting at 6.81%, so you should expect good revenue growth in the future. The sector median is 2.95%, which is a 130% difference. And Costco's 5-year average for their forward revenue growth is 8.86%. So you should expect good future revenue growth for Costco, and they're even beating out their peers. You can definitely buy Costco now. You're getting it at a discount, and it is a good growth investment. Although I would like to see the price to earnings ratio come down a little bit, as that is a more favorable buying opportunity personally for me, as this stock is extremely overvalued and it is going to be bearish. Thank you so much for watching this week's episode. I hope you learned something new about Costco stock. Please make sure to check out my Discord and my website. More to come for both of those platforms. Please drop a comment, subscribe, and like.